cedi appreciates 21% against dollar in 2025 but slips 19% since July. Also, Ghana's public debt rises to 628.8 billion Ghana cedis in July 2025, says the Bank of Ghana. And also, Ghana signs $1.5 billion oil and gas investment deal with ENI and Vitol. Now let's settle for the details of the story. The Ghana cedi has recorded mixed fortunes in 2025, appreciating strongly in the first half of the year before losing significant ground in recent months. According to the Bank of Ghana's September 2025 summary of economic and financial data, the local currency has appreciated by 21% against the US dollar between January and September. However, it lost about 19% of its value between late July and September after earlier recording an impressive 40.5% appreciation in July. As of September, the cedi was trading at 12 Ghana cedis, 15 pesos to $1 on the interbank market, and this comes after months of strong gains in which the currency appreciated by 43% in May, 42.6% in June, and 40.5% in July. The cedi's performance against other major currencies has also been mixed. On the interbank market, it appreciated by 6.9% against the euro to trade at 14 Ghana cedis 23 pesos in September, while gaining 11.8% against the British pound. Despite these gains, it still lost considerable value between July and September, reflecting growing pressures on the economy. Despite the recent depreciation, the governor of the Bank of Ghana, Dr. Johnson Isiama, has maintained that the cedi remains one of the world's best performing currencies in 2025. He attributed the recent decline to seasonal trade pressures and weaker than expected remittance inflows, which traditionally provide strong foreign exchange support. Opening the September 15 Monetary Policy Committee meeting, Dr. Siama explained that remittances in 2025 have not been as robust as in previous years, creating temporary strain on the currency. Looking ahead, analysts project mood stability in the near term, supported by positive investor sentiment and expected inflows. A major factor driving optimism is the World Bank's approval of $360 million concessional loan, which is expected to boost the forex reserves and improve market confidence. Market watchers also point to the MPC decisions and potential policy moves by the U.S. Federal Reserve. A cautious rate cut in the United States to address weakening labor market data could ease pressure on the dollar, thereby supporting the cedi's outlook. With global dynamics and local economic reforms still unfolding, the cedi's performance in the final quarter of 2025 will hinge on a balance of fiscal discipline, external inflows, and investor confidence. Now, away from that, Ghana's public debt stock rose by 15.8 billion Ghana cedis in July 2025, reaching 628.8 billion Ghana cedis. New figures from the Bank of Ghana have revealed. The increase pushed the country's debt to GDP ratio to 44.9%. In dollar terms, the total public debt was estimated at $59.9 billion, slightly higher than the $59.4 billion recorded in June 2025. The latest figures mark a reversal from the sharp decline seen earlier in the year. Between March and June 2025, Ghana's public debt fell significantly by 156.4 billion Ghana cedis, largely due to the strong appreciation of the cedi against the dollar. Data show that the debt stock stood at 769.4 billion Ghana cedis in March, 730.3 billion Ghana cedis in April, and 612.1 billion Ghana cedis in May. By June 2025, it dropped further to 613 billion Ghana cedis before climbing back in July. The external component of Ghana's debt amounted to $29 billion in July, representing 21.8% of GDP, and this was only a marginal change from the $29.1 billion recorded in June 2025. On the domestic front, debt levels increased to 323.7 billion Ghana cedis in July, up from 312.7 billion Ghana cedis in June, and this accounted for 23.1% of GDP. Despite the rise in total debt, Ghana's fiscal operations in July showed some positives. The fiscal deficit to GDP ratio stood at 1.4%, while the primary balance registered a surplus of 0.7% of GDP. Analysts suggest that while the rebound in debt levels reflect renewed fiscal pressures, the maintenance of a primary surplus signals the government commitment to stabilizing the fiscal position and economic recovery effort. That's all our story for the bulletin. Ghana has entered into a landmark agreement with Italian oil giant Eni, global energy firm Vitol, and the Ghana National Petroleum Corporation GNPC to boost the country's oil and gas production capacity. The deal, worth $1.5 billion was signed on the sidelines of the 2025 Africa Oil Week in Accra. The Memorandum of Intent outlines an integrated strategic investment plan aimed at increasing gas production and optimizing oil output, positioning Ghana as a stronger player in the sub-region's energy market. President John Dramani Mahama described the agreement as a major step forward in Ghana's energy agenda, reaffirming his government commitment to building a robust business climate. Minister of Energy and Green Transition, Honorable John Dinapo, underscored the transformative impact of the investment. He noted that the deal represents more than capital injection, describing it as a catalyst for sustainable growth. The initiative is expected to unlock new opportunities for infrastructure development, employment, and energy security. It aligns with Ghana's broader energy strategy of expanding gas-to-power initiatives, strengthening downstream activities, and positioning the country as a petroleum hub in West Africa.